Palantir. Customers include the CIA, the FBI, the Army, the Marines, the Air Force, yet there's so much mystery.
Welcome back everyone to the Audacious Money Witch channel, where we talk about investing and trading and a lot of fun things. I can't keep quiet on Palantir stock anymore. Why Palantir stock is not what you think. Worth trillions. Palantir Technology. Palantir stock reported stronger than expected revenue and EPS in line with analyst estimates, but issued weaker than expected full-year guidance. Shares dropped 5% after hours. I want to talk about my new opinion on this stock. Will I own this stock? Do I think this stock is expensive? What does the stock do compared to my Snowflake and Cloudflare stock? Lastly, could Palantir be worth $2 trillion by 2030? I know most of us think that Palantir stock could become the next Google, like a $2 trillion company. Can it really? The big focus will be hearing about AIP customer conversion, U.S. commercial strength momentum, and the trajectory of larger deals in the pipeline. AIP refers to Artificial Intelligence Platform. Customers continue to discover new use cases with Palantir's AIP, presenting cross-selling opportunities. We believe Palantir is on the golden path for its monetization story on the commercial side and is well positioned to capitalize on the strong commercial spending tailwinds for 2024 to 2025. As we have discussed this story, growth and ultimate re-rating is around Palantir's U.S. commercial business, which is estimated to show growth of at least 40% in 2024. Wedbush analyst predicts and maintained its outperform rating with a 12-month price target of $35.
We let a genie out of the bottle when we developed nuclear weapons, and AI is somewhat similar. I saw an image in front of my eyes on the screen. It was me, and it was my voice, and wearing the kind of clothes I wear, and my wife or my daughter wouldn't have been able to detect any difference, and it was delivering a message that no way came from me.
Investors need to understand why AIP is such a game changer in the first place, and to understand that we need to talk about Gotham and Foundry platforms. Enable data science across an entire organization by giving everyone from executives and engineers to sales teams and human resources a consistent real-time view of all of their enterprise data. They do that by helping companies create digital twins, which are also called ontologies. At a high level, an ontology is a map of a company's resources and how they all relate. For example, an army regiment is an interconnected network of hundreds of personal assets, faculties, and objectives. And their relationships would include everyone's ranks and chain of command, who is responsible for every computer vehicle sensor or weapon system, who has access to what information, everyone's current orders, and their locations, and so on. That's a lot of data to keep track of, especially since things are constantly changing in real time. So ontologies are a great way to organize the big picture of these kinds of large and complex enterprises, and Palantir platforms help companies build and use these ontologies to do things like analyze data, track resources, and optimize their own operations. Both Gotham and Foundry can also connect directly to almost any company asset to receive status updates and even send back instructions like rerouting a vehicle or retasking a military unit. That's a huge level of access to give to any third-party software, which shows just how much some of the biggest governments, militaries, and companies on the planet trust Palantir's platforms with their most sensitive data. The problem is that Gotham and Foundry are both pretty complicated products themselves. It's hard to learn quickly. That's where AIP comes in. At a high level, AIP lets users interact directly with their company's ontology through prompts. So instead of coding or manually creating different data sets and dashboards, users interact with AIP kind of like how they would with a much more capable ChatGPT. Interfacing with an ontology this way seriously lowers the skill level that's needed to get things done right and get them done fast. That's a lot of value, but it still leaves the huge challenge of getting all the right data together. Building out your own ontology and getting AIP up and running in the first place. And that's exactly where Palantir's AIP bootcamps come in. AIP bootcamps are hands-on working sessions where participants can build real solutions to their own company's problems in under a week. Experts and decision makers go to these AIP bootcamps to work directly with Palantir's engineers and build out their own enterprise-grade AI tools and workflows using their own company's data. So how much could Palantir technology stock be worth if it continues to grow at a rate of more than 20% over the next 7 years? There's a lot of hype and excitement around Palantir's technologies these days. In just the past 12 months, its shares have surged by 190%. The data analytics company has some promising growth prospects, particularly when it comes to artificial intelligence. Many investors are hopeful that the company can be the next big name in tech. Today, the business is worth around $50 billion. But with so much potential on the horizon, is it possible that this becomes a $2 trillion stock by the end of the decade? Is the Oracle deal a sign that Palantir is going to get much bigger? On April 4th, Palantir and database giant Oracle announced that they would be joining forces to provide cloud and AI solutions to both businesses and governments. Palantir is going to use Oracle's cloud infrastructure for its Foundry workloads, and its AI platform will also be deployable on Oracle's cloud network. Palantir's profits could surge. Growth is important, but so too is profitability. A big reason Palantir's valuation isn't higher these days is because the company has only recently become profitable on a consistent basis. But Palantir has been moving in the right direction as margins are improving. And when combined with more revenue growth, the business bottom line could look a whole lot stronger in the future. Today, Palantir stock still looks expensive, but if the company can continue growing its top line while maintaining a strong profit margin, that multiple will come down, making the stock a more tenable investment. Could Palantir be worth $2 trillion by 2030? To see where Palantir's valuation may be by 2030, it's important to understand what its bottom line may look like at that point. Let's suppose that its margins continue to improve and that by 2030. Palantir's profit margin is at around 20%, and let's be a bit bullish and assume that its AI platform will draw in a lot of customers and that the company's top line will grow at an annual growth rate of 25% until then. Right now, Palantir is only expecting its revenue to rise by around 20% for the current year. Based on those assumptions, by the end of 2030, Palantir's revenue could come in at around $10.6 billion per year. Assuming a 20% profit margin would mean its per year earnings would be around $2.1 billion by then. And assuming the company has roughly 2 billion shares outstanding at the time, its earnings per share would be approximately $1.05. If investors are willing to pay a multiple of 50 times earnings, having a bullish outlook on Palantir's future, the stock could command a price of around $53 and would imply a 130% increase in its current price, which would put its valuation at around $107 billion. While that would be a great return for investors, it would be a far shy of $2 trillion unless the company's growth rate drastically takes off between now and then, or investors are paying an extremely high multiple for the business. It's unlikely that Palantir stock will hit $2 trillion by the end of the decade. Should you invest in Palantir stock? Even if Palantir doesn't hit $2 trillion mark anytime soon, it can still be a good investment to buy and hold. The company is still growing its business at a high rate. Its margins are improving, and its overall trajectory looks promising, with AI becoming more of a focus for companies. You should be prepared to hold it for a long term because Palantir's near-term gains could be limited given its high valuation. However, compared to my Cloudflare and Snowflake stock, Palantir's valuation is not as expensive, especially when you look and compare their PEG ratios. Because Palantir has very nice earning power, it looks cheaper in its forward PE compared to Snow and NetStock. The things for Snow and NetStock is they are growing revenue around 30%, while Palantir is around 20%. Revenue of $634 million was up 21% year over year, from $523 million to be exact. Palantir has won a new $178 million U.S. Army contract for Project Titan, a battlefield system using artificial intelligence. We anticipate that the U.S. commercial business, which accounted for 24% of our revenue last quarter, will remain one of the most significant drivers of our growth in the near term, CEO Alex Karp said in a letter to shareholders. Warfare in this century will continue to be transformed by software, Karp said. The platforms in use by our defense and intelligence partners present a very real threat to the survival of our enemies, he added. Palantir reported $105.5 million in net income for the quarter, or 4 cents per share, compared with $16.8 million, or 1 cent per share, in the year-ago quarter. It marked the company's 6th straight quarter of profitability on a GAAP basis. Karp said that was a record profit. For comparison, we now earn more profit in a single quarter than the amount of revenue we generated an entire year, a little more than a decade ago. While I do like to see Palantir increase their earning power. So will I be interested to jump in? Eventually, I will be sitting in cash for now, as I think the U.S. market is getting so heated. I will be just chilling by the sea.
More than $182 billion. What is Buffett waiting for? And 2, why not at least deploy some of it?
Well, I think that's pretty easy to answer. I don't think anybody sitting at this table has any idea of how to use it effectively, and therefore we don't use it. There have been times in my life that I've been awash in so many opportunities that I could have invested everything by nightfall, and then there's other times when the year goes, well, not in the early days, but now we haven't seen anything that makes sense, that moves the needle. It's just that things aren't attractive, and there's certain ways that can change, and we'll see whether they do. Under current conditions, building the cash position, I think when I look at the alternative of what's available, the equity markets, and I look at the composition of what's going on in the world, we find it quite attractive.